This is the wrap-up for the live market open on January 18th, 2016. Still a relatively gloomy mood in markets. On Friday it was terrible, with disappointing US retail sales that sort of triggered fears of recession, and there were lower chances of a rate hike in the United States because of weaker economy. Also, industrial figures were terrible, and only consumer confidence was okay. We had a further stock sell-off and a commodity rout, with oil prices settling well below $30. Another shock to oil prices came from, well, it wasn't that shocking that Iran sanctions were lifted as part of the nuclear deal. This morning we're seeing some kind of correction, but it's, oh, you can't see the screen, sorry. Here we go. Some kind of a correction. We're seeing that means safe haven currencies are a bit weaker. Euro dollar is within range, 108 to 109. Dollar yen a bit higher, 117.32, just above 117. It dipped below this level last week and reached 117.50 more or less. 118.20, or sorry, 118.30 is resistance on the top side. Pound dollar also came late to the recovery game, and I see it as yet another dead cat bounce after falling to 142.50, just below this level. Pound was hit last week by weak figures, and it trades like a commodity currency. Weak stock markets mean a weaker pound. Currently recovering to 143.07. I put a resistance here at 143.50, more or less. That was a low point that we've seen beforehand. Okay. Dollar CAD, of course, moving higher, weaker Canadian dollar because of weaker oil prices. Again, some kind of a correction. 146.05 was the low, but the high, sorry, but that was on thin liquidity. And yeah, big week for Canada with the rate decision as well. Australian dollar awaiting Chinese GDP, struggling at low ground. It fell under 69 last week to the lowest levels since 2009. With this early sell-off in the Asian session, it fell to a new low of 68.34. Currently some stabilization, holding its breath basically to the Chinese GDP. Kiwi dollar got carried away with other commodity currencies, but it's recovering. The situation there is better. Okay, we have tomorrow we have the milk prices and other figures, CPI. Yeah, so that's it for events today. In terms of indicators, it's a very, very quiet day. Basically, we don't have anything in Europe, and it's a US holiday today. That means currencies continue trading, but volume is low. Big event and the tension today is towards the Chinese GDP, the first and final release for Q4 2015, and basically the final GDP for the whole year. Expected to stand at 6.8. Nobody's going to believe it anyway. Industrial output, fixed asset investment, retail sales are all closely watched to see where the Chinese economy is doing, because China, second largest economy in the world, is the global engine of growth, has been so. The United States is not picking up the baton so fast. Europe is still the sick man of the world. So a lot of eyes are towards China, not because of the stock market, but more because of the strength of the economy. Okay, so it's the big event.